Hi everyone. Thank you for coming to the Risk Industry Colloquium today. We have with us Michael DeFelice. I hope I pronounced your last name correctly.
That's fine. Yep.
All right. And he's the insurance coordinator of the Sweet Group of New York, and we're excited to have your talk for today. Michael, over to you whenever you're ready.
Thank you, Mike. Hi, everybody. So today I'm going to talk about mitigating risk in a subcontract relationship through insurance. Okay. Let me just get my slide here. So today's agenda is going to be, I'm going to introduce me, my role in the company I work for. I'm going to talk to you about the construction project and the contract they're in. In any construction contract, just to give you a brief, there's always a question of risk. Insurance is used in that construction contract to what's called identify the person that the person works for, whether it be an agency, a homeowner, or a real estate developer. They hire subcontractors or contractors to do a job, but the contract between that other contractor and the person writing the contract, it's all about a question of how much risk will they need to take on and how much they need to transfer over to the person working on the project. And I'll explain more as we get along. I'm going to talk about risks and exposures. I'm going to talk about the project owner, construction manager's role in writing the contract, talking about developing insurance requirements for the person working for the person writing the contract, examination of insurance policies and documents, and talk about as the contract is written, as the insurance requirements for the contractor is developed, what needs to be looked out for the insurance? It's just that they need to give insurance and that's it. No, the policy needs to be examined to make sure that the wording of the policy is such where the insurance takes on all the responsibility for any liabilities, damages, exposures. You don't want to have a contractor whose insurance has holes in all the coverage and they don't pay for anything. So if the insurance doesn't pay for anything and ultimately the contractor is responsible for a lawsuit of $2 million, there's a risk that that contractor will come after their employer, the project owner, the real estate developer, the homeowner. So we need to make sure that the insurance will cover any and all liabilities and other things that need to be covered. Well, I'm going to talk about the claims process. So there's a claim. How does the claim get paid throughout the insurance? What needs to be looked at? What needs to be remembered? And I'm going to also talk about debunking some of the myths in insurance risk management. If you guys go into the construction world, you're going to talk to a lot of different brokers, a lot of different contractors, each with their own particular viewpoints. There's a lot of myths and half-heard rumors out there that we should debunk to make sure that your job gets done where your risk manager job is going to be done appropriately. Okay. So about me a little bit. Who am I? I'm an insurance, as Mai said. I'm the insurance coordinator for Sweet Group in New York. We're a very large general contractor. We've been in business 112 years. Recently, we got acquired by a company called Sullivan Land Services. I'm a certified construction risk and insurance specialist in New York. I used to work as a health and life welfare broker. I used to sell employee benefit packages, healthcare, life insurance over to small businesses. And I worked in the healthcare industry as a health insurance advocate and troubleshooter. So I've been in the insurance industry doing insurance for over about 15 years for all this experience. So the question I always ask myself, the last one here is, so how do I mitigate risk, my current role, and why? Right. So my employer hired me as a risk specialist in order to make sure the subcontractors we hire for any job, we are the overseeing construction manager. The real estate developers, homeowners, city agencies will hire us as a manager to oversee any and all aspects of the project. Whether it be doing complete renovation of an entire apartment building, doing perhaps a cleanup of a waste yard, maybe doing some sort of what's called asbestos or hazardous materials removal or abatement. I need to make sure that the subcontractors that we hire through their insurance documents takes on all the risk and responsibilities of all their work. So, for example, one of the risks, which I'll talk about, is to say that the contractor has completed their work, a bystander comes along, a brick falls out of a perhaps a house or a building that the contractor had built, hits them on the head, they decide to sue the contractor because they got hurt, they have brain damage, whatever the case is. The court says, yes, that contractor is responsible. They are liable for this particular injury. Okay, great. Now let's go to the insurance. Will the liability insurance pay for this, or will the contractor who is suffering now for $2 million of damages seek, if the insurance doesn't pay, seek to get that repaid otherwhere? Meaning that the construction manager, us, and to make sure it doesn't happen, and to make sure the insurance covers liabilities, exposures, dangers, injuries, and other risks that we're going to talk about now. So that's what I do. Okay. So the construction project and the contract. It is a contractual relationship between the project owner, again, would be a city agency, a homeowner, or other real estate developer, and construction manager or subcontractor, right? The construction manager or subcontractor who was hired by this owner of the project will have to identify the project owner, meaning taking any and all responsibility for their work, liabilities, exposures, injuries. Okay. Now, this particular project owner has to develop a contract with this particular manager or subcontractor to make sure the risks are properly identified and also properly taken on by the contractor and the insurance, right? So I'm going to show you right now, guys, a example contract. It's going to have a scope of work within a time frame. We're going to talk about the work risks later on of this particular contract and also any contract. And we're going to talk about a risk assessment. Okay. So let me go into that contract. Give me 1 second here. I have it all saved up here. Okay. Go. Okay. Just going to share my screen with that one. Go. Okay. So this is an example of a contract from the project owner, the Department of Design and Construction. Okay, this is one of our contracts. They want us to renovate the Queens Botanical Education Center in Queens, New York. The contract identifies the scope of work. Okay, so this is what they want us to do for them. Okay, scope of work has multiple layers.
Sorry, Michael, I don't think we're
You're not seeing this?
the document.
Oh, I'm sorry. Let me try again. You guys see it now?
Yes.
Okay. It's a little technical difficulty. Sorry about that, everybody.
Okay, no problem.
Okay. Yeah, so you can see from New York City DDC, Department of Design and Construction. This is what, again, as I said, the DDC wants the contractor hired. And it's a whole process, of course, with being again the job awarded, but that's a whole different process that I don't really deal with. So we got the job, and now the DDC wants us to do all this stuff. The scope of work is long and it's complicated, right? Okay. And then sometimes you'll see it's a little redundant because they want to be sure that this is going to be done. A lot of it has to do with installing equipment, pulling, providing all cable, pull strings and conduits, electrical work, interconnecting components, internal and external rack cabinets, on a secure IP configuration, cabling equipment, coordinating cable labels, technical furniture, design details, furniture manufacturing, all this kind of stuff, right? So now the contractors figure out how they're going to do it, but DDC in the scope of work has to figure out, okay, we have the scope of work for the contractor. Obviously, there's risk. How are we going to have the contractor take responsibility for all the risks associated with this project? And what insurance requirements are we going to have them do in order to make sure that the insurance takes responsibility for any liabilities, any injuries to the workers, or any kind of other risks, exposures, anything that happens to them. We want to make sure that we're held harmless, where we're not going to be responsible for anything that happens because of the work the contractor does. Okay. So, did you guys see Schedule A? Do you see this document here? Yes?
Yes, Michael, we do.
Okay, great. Thank you. So this is what DDC had developed, and I'm going to go down, as part of the insurance requirements, right? So you can see from the scope of work that there's cabling involved. There's some what's called low voltage, right? A lot of connecting of computers, IP, internet, ready machines, and what have you, right? So they're thinking, okay, you know what, this might be liabilities. There might be somebody who comes across, maybe get electrocuted by this and may want to sue the contractor for whatever reason. Maybe there's a bystander, maybe there's a student in the education center for their work. So we're going to have them do general liability. And they decided that they're going to have them do all these requirements here. Okay. Why the requirements? Well, that's really up to the insurance person at DDC. I'm just giving you kind of a general overview here. You can see that the requirements include what limits to require them for, as well as additional insured and any other particular endorsements. What are liability limits? Liability limits is what the insurance will pay up to. Usually we require what's called a per occurrence, right? Every time something happens, they pay up to this, they pay up to this amount, but the insurance can only pay up to $2 million for the entire year. Okay. They do require what's called a per project aggregate, meaning that the insurance will not run out even if there's 1 million claims. Okay. Usually $2 million is the most they will pay in claims for that policy year. What are additional insurance? Additional insurance are persons on the insurance who also enjoy the coverage that the insurance will give them, for the most part. They require the city of New York as one of the additional insurance. Number two, and this is pretty common amongst New York City contracts, all persons or organizations which contract requires being named additional insurance. And they reference what's called an ISO form, CJ 2026, which is an endorsement number that we'll get to in a second. Okay. So you really have to know all the endorsements and look at the policies. If you're the person writing these insurances, not only the certificates of insurance, which we'll get to what is that, but also the policies. So you can see, you can verify additional insurance have been added. Okay. It does have the limits and also does have a per project aggregate that we need in order to make sure that this contractor insurance will take on the risk as we need it to happen. They also require their insurance too. Workers' comp, right? Make sure that the workers' comp insurance will pay for any injuries, disability insurance, employer's liability. If if one of the employees decides to sue their employer because of injuries, what's called an action over, which is very common in New York, unfortunately, the workers' comp in New York will cover a lot of the lawsuits that the employee will bring to the employer. The builder's risk, which is coverage during the project for risk associated with that, which we'll get to as well. auto liability for any cars used for business. Okay, because they assume, of course, which is pretty standard, that any contractor that wins this project, as well as their subcontractors, will drive to drive to the job site using company cars or even personal vehicles used for business purposes, which can be insured and can be done. It's called hired non-owner insurance. Okay. Now, even though it's not blackened in, sometimes they'll require other insurances based on the job site. Perhaps if the job site is requiring some sort of water work on the docks, they may require marine pollution insurance or marine protection. Or if it's on a railroad, they require railroad protective liability or asbestos liability. Professional liability is that also called errors and omissions insurance, that can be held if you're doing anything that requires engineering work, perhaps sketching, architectural work. So they require a contractor here to do design build work, manage the architectural work, we do design, the drawings. So they want to make sure there's no errors or omissions. So they put on professional liability to make sure, and they put their requirements here. They may not request umbrella excess, which is secondary liability, right? So you have your general liability, which covers a certain amount of money. Then you have your excess, which covers additional amounts of liability. Okay. There's a lot of myths associated with excess liability called follow form. I don't know if you guys heard that term, but that's a myth, and I'll explain why. Also, they may require other documents such as certificates of insurance, which is proof of or evidence of coverage, to be sent somewhere and have certain things there so they can have proof of the insurance, so they can reference it. Or even sometimes broker certifications like this to identify brokers who certify that everything said on certificates of insurance or other policy documents are true and absolute. I'm sorry, not absolute, true and have no errors. Okay. So again, as I said before, to give you an overview, DDC, New York's Department of Design, has this project they need. They want to hire contracts, but they develop the risk assessment in such where they're developing insurance requirements to make sure that the contractor insurance will cover any responsibility, whether it be court damages, exposures to injuries, asbestos, hazardous materials, whatever, any kind of loss that may happen. The contractor will take care of it, and they will not come after the DDC because the insurance will cover that. They no need to come after anybody else. The monies that come out as a result of court damages or anything else will be covered by that insurance. Okay, moving along. Okay. So this is what I always look at when I look at subcontractors. I look at something called the horizontal exhaustion of insurance. So there is something called vertical, which I do not like, and I'll tell you why. As in the slide, in the construction manager's risk assessment of insurance, the objective is make sure our direct subcontractor's insurance takes full responsibility in any horizontal exhaustion. Okay. We develop our contracts as well as similar to DDC to make sure that happens. And I'll show you again. I will go back to sharing my screen. Share that. Okay. So this is the horizontal vertical exhaustion of insurance. I'm going to show you also an example of a subcontract that we use to make sure we achieve the same objectives as the DDC, that the risk is taken on by the subcontractor we hire to do a project that we're hired for as a construction manager. Okay. So we are here as a general contractor. Our subcontractor identifies us through their primary insurance. Okay. Hopefully it doesn't come to where our primary insurance is used. We always want the subs insurance to be used. okay? The general liability for any liabilities, and then the excess insurance for any secondary liabilities. We want to make sure that we're not involved. These red lines are a no-no, okay? We want to make sure that as we hire a subcontractor, that everything here will be covered and the insurance will be exhausted. We want to make sure this is triggered first, and if this insurance runs out, then the excess will be triggered. So in our subcontracts we develop, it's similar. We require subcontractors to have insurance requirements to make sure that they have enough liability limits and endorsements to make sure that their insurance covers any and all risks as well. I'm going to share with you as well that. Okay, second here. So this is our template for a subcontract. We have the scope requirements, where they have to do certain things for the project. And if we keep going down, we write in some of the insurance requirements. Insurance required has to be primary non-contributory, meaning that their insurance only has to be triggered. Our insurance will not be involved. And we list our insurance requirements. We need this. We need general liability, automotive, workers' comp, and umbrella liability. For certain trades, you need to let it be higher because of a higher risk. Scaffolding, demolition, excavation, erection for steel's foundation, and so on and so forth. What I did here is I described the limits, but also the endorsements I need for the insurance when I review to make sure that A, their insurance covers all the risks, and B, the money that they need the insurance to cover is not recouped by the insurance, and that the insurance does not run out. So we're not involved when there's an incident. Okay. And go back to the presentation. Okay. Alrighty. Moving along. So liability exposures. So one of the types of insurance that we require is liability insurance to cover liabilities that may occur on the job site. And you can see the various types of liabilities here: premises liability, operational, products, complete operations, contractual liability. All right, these are 5 types of common exposures. There might be others, but these are most common to know. And what is each one of them? Premises liability describes the risk an organization faces if a customer or client is injured on the premises, tripping or hurt themselves at the store, for example. Organizations that require customers or clients to be physically present, such as retail stores and landlords, are particularly at risk for these losses may be held liable for bodily injury or body damage. All right, so someone comes in the store and trips on something that was recently constructed because of the premises. Maybe there's kind of some kind of like a raised lip from a door. This happened to actually my dad. He was at a doctor's office. There was an error in construction. There was a lip between the entrance of the doctor's office and the door. He tripped, and the doctor's office may be liable, but they have to now pass on the responsibility to the contractor who completed it. So hopefully that their insurance, the contractor, will pay for any approved court damages. Operational liability, right here. Operational liability exposure refers to the possibility that an organization would be held liable because of bodily injury or property damage that occurs as a result of their ongoing operations. For example, imagine a contractor working in a client's home. During the course of their work, an employee from the contract drops a tool, striking a passerby and causing bodily injury and property damage to the home itself. So as they're doing their work, drop a tool on the foot, ow, liable. That person who has the foot injury will sue the contractor for the tool hitting the foot, right? Foot injury. Products liability. Products liability refers to the loss exposure an organization faces as a result of manufacturing, distributing, selling an unsafe or defective product. An organization that makes or sells products is at risk. Associated injuries may occur virtually anywhere in the world once an organization's products have been manufactured or sold. Right? This is going on right now with Borishead in the New York. Right? Borishead makes a product, but it's been affected with listeria. People get sick. They're suing Borishead. Borishead is found liable. Hopefully, their insurance now will cover any court damages from those people getting sick from listeria. Completed operations liability. Completed operations liability exposure refers to injuries or damages incurred by a third party due to work that has been finished, turned over to the purchaser or client, or put to intended use. For example, electrical fire caused by faulty wiring in a complete operations project would represent a complete operation exposure for the contractor who completed the work. And it should be noted that injuries or damages arising in complete operations can occur right after the project's done. Most times in any contract, we require that the contractor keeps their insurance for a long time. So even if 2 years down the line, some bystander comes on, even if the work is done, a brick falls in their head, if they don't have any endorsements that covers complete operations liability, well, then the contractors pay out of their pocket, and who they're going to come after, right? They're going to come after the project owner, the agency, because they can't pay $3, $4, $5 million in court damages. Okay, you're going to see this a lot. And finally, the last liability exposure is contractual liability. Organizations take on contractual liability loss exposures when they enter into a contract. By agreeing to contractual terms, the organization is liable if the other parties involved in a contract believe an organization does not fulfill its obligations on the agreement. Also called breach of contract. You're going to see in insurances that sometimes insurance will put breach of contract, saying, oh, wait a minute, breach of contract won't cover bodily injury or property damage as a results of the contract or the contractor not doing what they're supposed to do on the job. So the contractor agrees to do something. It's not done a specific way according to the contract. The results of bodily injury or property damage, contractual liability. And what insurance covers that? It's general umbrella excess liability. What is general liability? General liability is your first liability for commercial liability exposures. You have a business, you have a company that does roofing. You need that liability insurance to cover liability exposures here. What is umbrella or excess liability? It's your second layer. So you have a general liability coverage. You need excess liability to cover any additional damages that may result from lawsuits. Okay, general liability covers, say, $5 million in liability limits, but you get sued for 10 million bucks. Court says, yes, you're liable, but you have it now an excess policy that covers an additional 5 million bucks of liability. You're covered. Boom. Okay. Umbrella does the same thing that excess does, but it may cover additional liability exposures. That maybe the first general liability does not. General liability covers first, and then your umbrella excess covers next. Okay. We got project risks, right? And the insurances I'm going to refer to professional liability, contractual indemnity, which we talked about a little bit, bonding, property insurance, also called inland marine, which is another thing the contractors use, and builder's risk. Okay. Now, what are they? We got safety hazards, incorrect construction plans, unknown site conditions, poorly drafted contracts, natural disasters, labor shortages, inexperienced unskilled labor, equipment damages, poor project management, issues with suppliers, subcontractors, which we kind of talked about, and change orders. What are change orders? Change orders say, okay, did the work, so wait, we need to change something here. We need to do additional work. We need to add this or that. They'll do a change order. Okay. So what are these risks and how insurance covers them? What is a safety hazard, right? Sounds pretty self-explanatory. Construction sites are relatively dangerous places to work, where thousands of people sustain life-threatening injuries every year. Right? This explains why construction projects must have adequate safety measures in place to keep all staff safe when on site. So the risk of falling working at a height is common, for example, more in poorly designated construction sites. So you can have people working on unsafe surfaces, restricted accessibility movement at high up working areas. Human error is common, and failure to use safety equipment correctly. Construction workers may get injured also when structures collapse, installation, erection, or demolition, right? Inspections need to be done. Sometimes they're not, with some, sites. Moving items such as heavy machinery and vehicles lead to injury in the workplace as well. Supervisors will also ensure that construction isn't congested as well to increase risk of trips, falls, and slips. Falling objects, electrical issues are also a problem too. In other words, there's a lot of risks and hazards on the job site that may, and I'm going to add to this over here, workers' compensation, that may add to a risk of a person getting injured. Also, too, property being damaged as well. That's why property insurance, if the contractor is working on a premises that the is covered by a property insurance. Also, there's a risk of the contractor's own property, such as tools, equipment, and vehicles. Not vehicles. I'm sorry. Mobile equipment used on the job site. Inland Marine may cover that being damaged. It may be overcharged, may explode. Who knows? Incorrect construction plans. That's where professional liability that come into play. Professionally done construction drawings consist of multiple detailed sheets that include architectural, electrical, engineering, civil, structural, and mechanical engineering plans. So these engineers and architects are covered by professional liability for errors and omissions. So if they do an error, incorrect, their professional liability could cover that potentially. All right. So complex construction projects require more detailed sheets, more detailed engineering plans and assessments, as well as architectural drawings and also designs. Also, there's unknown site conditions. You guys went in there, you saw, oh, we know everything about this site, but you never know. Sometimes things may pop out. Unknown site conditions might be in the form of buried debris, perhaps hazardous waste, high water levels, maybe huge rocks that were not there before, or maybe soil with poor bearing capacity. Okay. Unknown site conditions can lead to contractual issues, especially if a contract agrees to complete the project within a specified timeline before discovering the issues. All right. Again, contractual indemnity. Maybe you should put that in your contract to say, wait, any old work, even if there's unknown site conditions, should be done. And that's kind of a rough example. To mitigate the issue as well, it's advisable to conduct thorough research on the construction site as well. Put that in your contract. Make sure that the builder's risk covers unknown site condition risk, right? Because as the contractor is working, the builder's risk will cover any and all contingencies that might happen. All right. We talked about poorly drafted contracts a little bit, natural disasters. Okay. We can't control acts of God, rainstorms, snowstorms, lightning. One of the greatest threats to construction projects is the risk of natural disasters. If not well planned for, it can lead to massive losses worth millions, if not billions of dollars. All right. Unlike commercial properties and homes that have been completed, construction sites don't have the full standard safety measures in place that would minimize the impact of disasters. Why? You can't plan 100% for disasters, right? So you need to have insurance to cover potential disasters, earthquakes, lightning storms, sinkholes, things like that. Even if extensive research is done, you can minimize and mitigate the risk. But again, there's always that risk of a firestorm, a lightning storm, earthquake that may happen that you did not account for. And that's where insurance comes into play. You got to have inland marine to cover your equipment, maybe bills risk to account for the loss of millions from delayed projects or risk of business interruption, or maybe perhaps, extra money needed to build additional protections, whatever it may be, it should be accounted for. Same thing with labor shortages as well. Labor shortages sometimes are unpredictable. In a survey, most respondents reported a relatively hard time hiring hourly craft positions, which can slow down the project completion time. Once again, builders risk. There's always a risk, of course, of laborers being let go, fired, quitting, maybe and they're injured and can't complete the project because they didn't account for that. So a lot of contractors will hire extra staff, but builders risk will account for shortages, delays, interruptions in the work itself. An experience with unskilled labor is pretty much the same as that. Equipment damages and theft, we kind of talked about it. Poor project management, errors and omissions, professional liability. And of course, we talked about the change orders. You got to have insurance to make sure that it will cover additional scope of work. The electrical contractor who came to the job site may need to attach more generators, may need to attach more electrical cable to do what they need to do. Contamination risks. Okay. What is a contamination risk? Contamination risk is anything that you come in contact with a hazardous material. Okay. We have disturbing existing pollutants introduced by people working on site. We have illicit abandonment, damage to underground utilities, waste management, disposal, transportation, and I'm going to put cyber hacking risk here because cyber hacking risk is a big one nowadays, especially, right? Why is that a contamination? Viruses go into your computers. You have electronic devices that you can't use on the job site, which is very common. All right. What is existing pollutants disturbing that, right? Pre-existing pollution conditions may be present on the site. Pollutants employees may encounter asbestos, mold, lead-based paint, contamination from abandoned underground storage tanks, for example. Disturbing these conditions can occur during building renovation projects. Accidental, and I'm going to emphasize accidental disturbance of pollutants may spend contamination affecting project execution and causing delays. Okay. Bill's risk also would come into play here, but pollution liability would cover any liabilities caused by coming in contact with hazardous liability. Hazardous materials. So when it comes in contact with asbestos and they want to sue the person, their employer, because now that they can't work anymore because of diseases, that pollution liability will cover it. We also have pollutants introduced by people working on site. So sometimes any project runs the risk of having contaminants brought onto a property by hired subcontractors or contractors hired by the city agencies or homeowners and what have you. Creating a clear, detailed contract to keep the site safe of all clients, stakeholders, what have you, is essential and helps protect parties from lawsuits, right? So that's why we vet the subcontractors, but there's always that risk that we don't account for. Now, unfortunately, in the construction world, nothing's 100%. Illicit abandonment. Illicit abandonment is the illegal dumping of waste instead of using proper recycling or safe and legal disposal methods, right? So any kind of waste runs the risk of getting in contact with hazardous materials. So we got to account for that in pollution liability. Same to the damage to underground utilities. Ensuring utility lines are marked and surveyed is vital to subsurface construction activity. Damage to underground utilities, such as striking an unmarked subsurface utility line, can be a serious potential hazard. It can cause utility service interruption. And guess who they're going to come after? The contractor, right? They strike a electrical line on the ground. Maybe they strike some kind of sewer line. Sewer comes up. The contractor is going to be held responsible for that because of their work, whether it be negligence or accidental work. Waste management, disposal, and transportation. Improper storage or handling of waste can lead to contamination of the complications as well. And finally, cyber hacking risk. As I said before, We have these hackers nowadays, right? 2024, a virus goes into the system, disrupts work, may even cause other damage to, or irreparable damage to electronic that have to be replaced. So cyber liability is important, especially if the damage caused by the electronic devices causes some kind of injuries to people, whether it be also property damage because of electronic connections that the hackers had got into. Cyber liability will cover any court damages caused by lawsuits from the people who were affected and choose to come after you with a lawsuit. Now, you may be thinking, oh, we got to stop people from suing us, but you can never stop 100, you can never predict 100% who's going to sue you or not. And that's the risk that we got to look at. Okay. What is the project owner's construction manager's role? We kind of talked about this, right? Developing a contract that's in spirit, and its spirit seeks to mitigate all the risks mentioned. They have to develop insurance requirements, efforts to identify, okay, the construction manager or the project owner, insurances that will cover any liabilities and risks. They're thinking, okay, we have a scope of work here. These are the risks that we're facing here from a contractor coming on. Their work is going to cover all these risks, liability risks, exposures, injuries, contamination. What are the insurances we need to have them have in order to make sure that their insurance takes responsibility? What type of insurance? What type of limits? What needs to be covered? What are the exclusion endorsements we need to put on? We need to put a per project there to make sure it doesn't exhaust these insurances. We need to make sure they have pollution because of contamination, because of hacking risks. We need to make sure they have cyber. How should the certificates of insurance be constructed? How are we going to have the proof that have the insurances? They require certificates of insurance to have all this information, or are we going to have just the policies to review? Okay. Are we going to be an additional insured, or are we going to require other people that we're associated with, the city, this other contractor, this entity? Are we going to not worry about policies, but have them sign indemnity letters saying that Joe Smith, contractor, takes responsibility for all risks associated with my automobile, whatever it is. There are some contracts that do that. We do it here when we have a contractor who may not be able to, and I'll get to this in a second, maybe afford the insurance we require. So we may, as an alternative, have them say, yes, I take responsibility for anything that's going on. Okay, types of insurance, right? So we talked about this a little bit, but I just wanted to give you kind of a overview. General excess liability, talk about liability risk. Automotive, risk associated with business owned or higher non-owned auto. Crashing to someone on a job site. That person who is crashed into sues the person who's driving the car. That car is associated with the business. Business gets sued. Business found liable. Automobile liability will cover that. Workers' compensation. Person gets injured on a job. They need to get paid. They can't work anymore. Doctor said, boom, you're done. For this kind of work, they need to be paid. Workers' compensation will pay that. Action over. Action over means that they say, okay, I'm injured, but I have no money in the bank. I want to sue my employer. The workers' compensation in New York, can't speak for other states, will cover that. Pollution liability, contamination. Any liability associated with hazardous materials. Bills risk, project risk associated with the ongoing project. Okay. Cyber liability, we talked about it. Property insurance, business owned property. We have property insurance to cover any property we own, any liabilities associated with that. Somebody comes into our property, hits their head on the roof of our property, they sue us, that property insurance will cover that liability. Same the equipment owned by contractors, the movable property, any kind of heavy equipment, tools used by the contractor gets damaged, the property, inland marine, movable property will cover that. Professional liability, architects, designers, engineers, errors and omissions. Professional liabilities for professionals as well, like brokers, for example, I used to have that as a broker, where if there's an error and omission, accidental, not intentional, Doesn't cover that. If the person is found to be intentionally doing something as an error, they will not cover that. Insurance said no, it is not. If you're damaging yourself intentionally, they will not cover that. Only accidental things that you're not responsible for. Okay. Marine insurance, water-based risks, and finally bond to guarantee a payment, right? Something called tap the bond. All the time, I always tell people, if you're hiring a contractor, make sure they're bonded, because if they don't finish the job, you can tap their bond and you can make them responsible for any kind of financial damages that may occur because of your house not being complete or whatever the case may be. Okay. The bonding is a guarantee. So yes, I guarantee I will cover this $150,000 you're giving me for the work done. Tap their bond. You can have the bond pay you for the rest or refund you the rest of that money that perhaps the contract did not do. Performance bond, payments bond. Examination of policies and documents. One thing that is a myth that I must say, you can hear this a lot. Oh yeah, you require this insurance? Here you go. Certificate of insurance. Certificate of insurance, we'll show you later, is not the policy. The policy will tell you how the insurance covers all the exposures, the risk we mentioned. Okay. We're going to talk about how certificate of insurance is constructed. But if the certificate of insurance is not the policy, then why do we need it? It's a proof of insurance. All right. Instead of carrying 100, 200-page document with you to prove you have the insurance, you can say, here's my certificate, it's 1 page. I'm still good. It's not expired yet. Here's my policy number. Here's my insurances. I have all these. But the certificate of insurance has to match your policy. The certificate of insurance doesn't match it. The broker is responsible for it. And professionally, he is. And he's saying he's lying, and that could be a big trouble. It's not legal. And I said, why request the full policies? To make sure all the wording, all the endorsements that you need in order to make sure the policy covers everything for your employer or for the contract. Make sure the risk is minimized. Okay. Certificate of insurance. Now, a lot of times contractors will even bring this to the job site. The product owner may say, hey, where's the certificate of insurance? I want to make sure you have insurance before you start working, which is very common. They will not allow a contractor to work before insurance is verified, whether it be the project owner who's doing the contract or the construction manager who's hiring these subcontractors. Okay. I just want to show you this so you know what you're looking at. You can keep this as kind of a, if you're ever going to deal with this, as kind of a guide to you. But then this is just like an insurance card in a doctor's office. It gives you the basics for proving you have the insurance as a contractor, right? Number 1 talks about the key components, kind of summarizes. It gives a disclaimer. Number 2 is the policyholder's information. Okay. When I say policyholder, sometimes the producer, the broker will have the policy. The contractor has to always grab it. I always ask them, ask your broker for the full policy. 99% of the time, the contractor will not have the full policy. They only have certificates. Named insurance, who's insured on the policy. 4, the policy numbers. I'm sorry. Pardon me. When I say policy number, I mean the NAIC number, the registration number of the insurances, to prove that the insurance is legitimate. Because I could just put anything on there. I could put Joe Smith Insurance Company, but if it's not a verified insurance company, say, wait a minute, this is not a real insurance company. What are you doing here? Okay. 5, policy effective expiration dates, right? So the actual policy numbers, the insurance names here, as well as their effective dates and the limits, and some details, maybe deductibles, what have you, and some of the summary of endorsements. You can see there's X's here for per project, additional insured, and what's called subrogation waiver, which I'll explain a little bit because I'm going to go over some endorsements. But the waiver subrogation is saying that the insurance company will not recoup monies after they pay claims. That's pretty much in summary what it is. We also have additional insured parties are listed here. All right. They may have all the insured parties here, or they may have a copy of an endorsement, what's called a blanket statement, meaning that any and all parties required by the insurance contract, by the written contract between contractor and the subcontractor, things like that. Okay. 7, certificate holders information, meaning that who's going to hold this proof of insurance, whether it be the construction manager, the city agency, the homeowner, and what have you, so they can hold it as proof of insurance. There's a cancellation provision there. What happens during cancellation? Sometimes I ask personally for what's called a additional 30-day notice cancellation to designate us, so we additionally receive notices of cancellation. This in case something happens to our subcontractor insurance. And finally, an authorized representative that the broker signs it, verifies the information is true.
It's okay. Don't worry.
So if I don't see the signature, say, wait a minute, do you verify this information is true? What's going on here? All right. So when I examine policies, I look for these various things here. And now your employer might require other things as well, but this is what I do. So I can just give you kind of an overview of different liability or other insurance endorsements, right? There's something called an ISO standard. So a lot of policies will have an ISO standard there that insurance carriers will use, which are kind of printed from an organization named for RISC, which I can put in the chat for you guys. And it's a repository of different standard forms that we use to say, and sometimes those put it on there and say, this is the endorsement we have. We don't need to write it. We'll just put that standardized endorsement on there for various endorsements or exclusions, right? So, but in the policy, I look for the clauses and language to provide the basic policy. Policies are contracts for us, right? You pay a premium, the insurance does a certain thing to cover you. I want to see how that contract is developed. What does it say? What is it going to do for the insured? What is the endorsements and exclusions that modify any of the policy forms? Okay. What additional coverage does it provide? What additional wording? What does it exclude? Because normally liability insurance is cover liabilities if you pay a premium, but the wording of the policy will modify that cover and say, well, we'll cover liability in this case, in that case, and when not in that case, and not in that case. I make sure the subrogation is waived. I said that if a claim is paid, the insurance company will recoup or not recoup. Make sure that additional insurers are covered for both completed and ongoing operations for any construction project, right? So that if the insurance company has to pay a claim for the contractor's work for negligence or other things, okay, we're also covered if on the person's insurance, if that person decides to sue us directly, the insurance will take responsibility for that work, for that liability. Primary non-contributory endorsements, okay, making sure that the insurance for the subcontractor, whoever you hire, only covers that claim. We will not be involved, okay? They will not, our insurance will not contribute, or the judge will not seek us to provide insurance for something that the subcontract insurance will pay for. Per project, per location, aggregate endorsements, right? Per project, meaning the insurance will run out for every project. So there's a million claims, the insurance will not run out. Hammer clauses. Hammer clauses say you need to do this or else we will not pay, or we'll give you a penalty or a higher deductible. Usually it's in the form of, if you hire other subcontractors or independent contractors, we're going to cancel your insurance, or we're going to not pay for certain claims, right? So I look for that to see if the contractor is going to hire their own subs. And if they do, say, well, you have to do these things or else you can, there runs a risk of your insurance not paying. So you have to let me know what's going on. Are you going to hire subs? How are you going to identify them? How are you going to vet them? Work restrictions. I've seen insurance and I'm in New York City, that says, oh, the insurance doesn't pay for things in New York City. Well, I can't hire the subcontractor if the restriction is a work exclusion that excludes work in New York. Or if they're a roofing contractor, I say, wait, you say you do roofing, but you have a roofing exclusion. Oh, well, I can't hire you. Breach of contract. Talk about this, about the contractual liability, right? They agree to do something in a certain way, but it's not, it's done, and something happens. The person who got injured may say, oh, wait a minute, this wasn't done in a certain way. I'm going to sue you for breach of contract because I was injured in this. It wasn't what it, the work wasn't done in the way we agreed. So I'm going to sue you. Cross liability. Cross liability is, let's just say that one of the subcontractors get injured when the employees decide to sue the project owner, the agency, DDC, or a suite. This needs to only be excluding named insured, right? The people who are insured on the policy, not other people, because if that other subcontractor, whatever entity decides to sue somebody else on the job site, or a project owner, or the construction manager, that needs to be covered. Action over. We talked about that a little bit. Coverage limits. Meet state federal requirements. A lot of these insurances, auto, workers' comp, need to meet state requirements, right? Need to have certain limits on them, need to have minimum endorsements. So I need to make sure it's compliant, because if a contractor is driving out there, they don't have compliant insurance, and the police comes rolling around, or something happens, and the contract gets found out, they don't have the minimum insurance, they're in trouble. And we could be held responsible too, because we hired them. So we need to make sure that is done. All right. Other things to look for: wording endorsements, privity, right? Make sure that if there is some sort of wording in the contract, insurance contract, that there's no wording that makes it very restrictive, right? I'll give you guys an example. I know we're almost out of time. I'll give you guys an example here. Let's see here. All right. Share this. Okay. So this is a really good article by an organization called ERMI. Okay. And ERMI is an institute where I got my CRIS, the Construction Risk and Insurance Specialist certification. They talk about this, and they give an example to me of a statement that should be on a lot of blanket statements for insurance wording that I think should be good. So I usually look at wording for endorsements, and I'll show you an endorsement as well if we have a little time. But I make sure the endorsement covers a wide range of things. It doesn't restrict anything, or it doesn't not cover things that we need. Okay. Any person or organization whom you're performing operations when you and such person have agreed in writing in contract or agreement for such personal organization as additional insured, right? So any personal organization. Sometimes you'll see endorsements say only persons you have a written contract with. Well, is that something that you need, or is it where the additional insureds are not all going to be in a written agreement with that contractor or other entity? That's something you got to think about right there. Okay. Access follow form. Again, we have a little bit of time, so I'm going to race through this a little bit, and I apologize. You can ask me any questions you like, but excess follow form refers to excess secondary liability policies. A lot of times you can hear that, oh, you don't need to look at the excess policy. It's follow form. Well, it's not absolute. They have their own endorsements and contract as well. I like to look at this. The named insured matches over to the W-9, which is here as well. If the name is different than named insured, it's like, wait a minute, what's going on? You really, this is your insurance? You'd be surprised sometimes. Sometimes. Go back to the presentation. Okay, I think I'm here. Yep. Okay. Well, state, I repeat a lot of this too because I want to emphasize this. And I like to also say to everybody, Make sure the contractor, subcontractor's insurance is approved before they start work. A lot of times they're like, okay, we need these guys to start work, but you need to make sure the insurance is there before they start because things might happen on day minute one. So you got to be careful. Okay, I was going to go over the claims process, but we're at 12 o'clock right now. So I'm going to go over the myths and debunk. The claims process is something maybe not as important to the initial risk assessment. I just wanted to give that so kind of determine and get a knowledge of how claims are done, so you kind of get an understanding of how insurances may pay out. But I just wanted to go over this a little bit, myths and debunk, because you guys are going to go into the construction world and you're going to hear this a lot, especially if you're a risk manager. I hear this all the time. Things like, oh, nothing will happen. Why need insurance? I know these contractors very well. Yeah, we have their friends and family, but hey, this is just business, right? Even if it's your mom, I know it sounds bad, but if it's your mom doing the work for you, we need to make sure there's no risks to her as well, and nothing will come back to us. If we're hiring somebody we know, we still should make sure the insurance is there so the insurance will take responsibility for any liabilities and exposures. Things like, oh, it's a short job. Why do we need to worry about risk? Well, even if it's a 1 minute job or a 5 year job, insurance still needs to be able to cover the responsibility because, again, minute one, somebody could get hurt. Or remember, completed operation is important. So they do a job for a minute, then after it's completed, somebody gets hurt after the job is completed due to a loose brick or something like that. Still need to be done. We just need certificates of insurance, not policies. Well, no, you still need policies to review the entire endorsements or exclusions are on a policy. This is my favorite. We can cancel the insurance after we have a job. You need to worry about completed operations, right? In that year, you can't have your insurance only last for a day that you're doing a job. You need to make sure it's there so that for that year's time, if anything happens, any occurrences, the insurance will cover it, right? Workers' comp, for example, in New York, people have 1 year 1 year grace period to file a claim. So 6 months down the line, you find out, oh, one of your workers got injured. To file a claim, your workers' comp has to be there as a contractor. And oh, I love this. No one else requires insurance. Someone's vetting. Well, I say, well, I can't speak for them. You have me at a disadvantage. I'm worried about my company. I'm worried about the contract we have with you, not about, X company in uptown or in a different state. Oh, and this is something that I think a lot of contractors are struggling with. I'm just a small contract, can't get insurance. Well, then you have to figure out with them what they can do in order to make you feel comfortable. They are taking the responsibility through insurance, indemnity letters, bonding, and whatnot, so that they can. In New York, it's a hard market here, so premiums for liability insurances, for example, could run 100, 200,000, maybe even more than that. So a small contractor who has 5 people that just started out and they want to get with the big boys might not afford the premiums. Maybe it's more than their revenue. So if we want to hire a certain person, we have to figure out what else can they do. And sometimes, unfortunately, we have to deny certain contractors because of their insurance or because they unfortunately don't have the capacity to maybe do a job or have the insurance we need or other things we need to have them take responsibility for their work, unfortunately. Alrighty. So that is it. I'm sorry, May, it took too much time. It's 12:04, but do we still have time for questions?
I think we do. Does anybody have any questions? No? Well, I guess that's because you
No?
explained everything very clearly, Michael.
Yep. I see people had went off, so I hope it wasn't boring anybody.
No, no, not at all. It's just that it's over 12, so I guess like people have their own stuff to do.
Yeah, I
Um,
understand that. No problem.
yeah, yeah. Thank you so much for coming to the RISC Industry Colloquium today. We're honored to have you, and that
Thank
was
you.
an exciting talk. And I guess, yeah, thank you for coming.
Okay. If anyone else has any questions afterward, let me know. I can send over the presentation and documents, and I'll be more than happy to answer anything afterward offline.
Yes, of course. Thank
Yeah.
you so much, Michael.
You got it. My pleasure.
Have a good day.
Good day.